Amongst big developments between yesterday and this morning, Delhi Chief Minister was arrested late last evening for questioning, or rather after questioning by the ED officials in connection with the excise policy case. Good morning, Niraj. Not market moving, but rather significant development.
Most certainly. Everything related to elections and politics will be very significant.
I like how you've attributed this to elections.
I'm just saying election. I'm not attributing this to elections. I'm saying everything attributable to or important for elections, politics. And macro would help. I mean, there are some positive news flow as well. There is a note from Nomura which says that we may see a transition from El Nino to La Nina. But on the flip side, IT and Accenture, and that's the other big talking point as well.
And a big development, Swiss Central Bank went out and cut interest rates. So that was the first of many.
As did Mexico.
It seems like it's going to be an exciting morning. Lots of different cues pointing in various directions, but nevertheless, let's start with where the implied Nifty is this morning before we go into all those global cues. And then, of course, I'll toss it over to Niraj for what's happening locally as we gear up for trade this morning. That's implied Nifty after a pretty solid start to trade yesterday. This morning looks rather subdued. In terms of stock movements, Asian markets are trading mixed in early trade, except Japan, which is having a good run again. Japanese markets once again have made record highs to trade above levels of 41,000. This comes in as inflation actually accelerated. So most countries or most markets react to a better or a lower reading in inflation. Japan, clearly a different story to tell. Inflation for the month of March comes in at 2.8% versus 2.2%. And the core inflation also continues to rise. Remember, this is the comfort level that the Bank of Japan is eyeing, which is about 2%. That is, of course, what's happening in Asia. The rest of those Asian markets looking rather flat. Across the other parts of the world, it was Wall Street that continued its rally in overnight trade. The Dow, the Nasdaq, and the S&P 500 once again closed at record highs. Financials and industrials led the gains this morning in overnight trade. Apple declined quite sharply as the Department of Justice sued Apple, saying its ecosystem is a monopoly at the expense of consumers. Tech stood out on the downside, and this came in after Accenture lowered its guidance to 1 to 3% versus 1 to 2% versus 3 to 5% that was initially put out on back of a weak global outlook. We'll talk about what this means to the Indian IT sector, but in overnight trade, the ADR of Infosys and Wipro sold off as well. You had the stock media giant Reddit that debuted on the exchanges, opened with a gap up of 38% and went home with gains of nearly 50%. So that was a Reddit story, but apart and beyond that, tech generally having a little bit of a down day. An interesting central bank action you had, just before I go into the other central banks, it was asset manager Vanguard, Niraj, and we've been talking about 3 rate cuts. They've actually come out and said that they do not expect the Fed to cut any rates at all in the current year. So I think while they've said that, markets, of course, not reacting to it. But I'm sure people will take notice as early as next week after all this euphoria dies out.
Yeah, I mean, whether you trust the Fed, and most people say don't fight the Fed. So if the Fed is saying that there is going to be a QT reduction and an interest rate cut, then it doesn't matter what Vanguard says.
Let's not forget what the Fed said late last year as well, of course. But then this is just news point. This is what asset managers globally really made of that Fed move. Talking about central banks, very different, unexpected action that took place. Swiss Bank has been, economists were betting on a rate cut from the Swiss Central Bank only in June. But defying that, the Swiss Central Bank actually went ahead, beat the ECB and the Fed, and cut rates. That was a big move coming in overnight trade, on back of which the Swiss franc, which is a very commonly traded currency, actually declined. The Swissy dollar pair saw a big move coming in, the dollar picking up strength. You also had Germany, regulators indicating that Germany could now slip into a recession due to weak consumption and anemic demand. England, on the other hand, which is currently struggling with anemic demand, indicated that they seem to be on the right track. In fact, the Bank of England has said that they could look at cutting rates. They're clearly moving in that direction for now. So lots of moving parts with central bank activity. We talked about this on Monday itself, but by Friday, we've had most of those actions out of the way. Bitcoin was volatile. It declined in trade. Crude declined in trade. All of this on back of a stronger dollar needed. So I think the currency markets must must be having the time of their life. Very unexpected moves. The Swissy dollar, which is a very popular carry trade currency, would have seen a big correction on back of the dollar gaining, right?
Yeah, quite interesting as to what's happening there. And yep, Samina tracks this very, very closely. So refer to her for almost any kind of currency moves, really. But let's talk about the trade setup for the day today and try and see what could be happening there. So the global cues, as we highlighted, are maybe okay. The US futures are still in the green, so the implied open could be indicating a start which is flattish to marginally higher, if you will, unless I'm very wrong. But I think that should be the kind of start that we should anticipate. Yeah, flattish to marginally lower, actually. So I stand corrected there, maybe courtesy IT. So lower VIX and global cues, that's the first time on the trade setup that lower volatility and global cues may aid the index, but IT will probably play the party pooper, is likely to be the party pooper, and I think IT has done that, is playing spoil sport and is probably leading the index lower. That's why the implied open seems to be suggesting. Now, yesterday, the interesting thing that happened was that we kind of closed in and around 22,000, but there was significant call writing at those levels. It's almost as if call writers knew that 22,000 is going to be a bit of a resistance, and I think that is what is turning out to be, because the maximum OI is there and the maximum call concentration also happened at 22. So you would think that if the index were to move higher, these guys would have to come and cover. That doesn't seem to be the case today for now, courtesy IT. Let's see if banking steps up and tries to do something. So that's the other aspect. And from amongst themes to watch out for, and we'll talk about IT in detail, Samina will start that, but the commodity bounce back that we're seeing, base metals, crude, rubber, what have you, is probably denting prospects for commodity consuming sectors. So sure, metal companies like SAIL, Hindustan Copper, etc. may do well. But what about tires? What about auto ancillaries? I think all of those could be under a bit of a cloud, because we are anyways looking at the margin expansion juggernaut coming to a bit of a halt. If there are corrective moves, then it may impact earnings for sure. So be careful on tire companies, on auto ancillaries, and some others which are commodity consuming companies. They might be in for a rough ride in Q4, and if not Q4, definitely Q1 of FY25. Samina.
Niraj, you talked about rubber prices, and I think crude is also a very critical input for all these companies that are rubber, where rubber is a key input, right? So it's going to be a double whammy, and what I think and I'm glad you brought this up, because we've not considered the crude impact from late 70s or mid 70s, so really late 80s. May not be so much in the fourth quarter, but I think it's important for us to take notice that as we go into the new financial year post the fourth quarter, these are things that could once again impact earnings for a company, or at least the bottom line. Tech stocks, and we'll talk about that in more detail. Once again, Accenture is going to lead to a sell-off in IT stocks. This is exactly what we saw last quarter, where the reporting came in from Accenture. It was disappointing. They seemed concerned about the outlook, and that led to the sell-off getting kick-started in the IT stocks in India. This morning, it's no different. Accenture has reported numbers. They've said that they've reduced their guidance to 1 to 3% versus 2 to 5%. Due to uncertainty leading to clients who are reducing spending on consulting services. And Niraj, I think you might have perspective on this as well, right? What I want to understand is the decline in spend is because of AI and operational efficiency, or is it because companies are actually slowing down? So is this good for Accenture, or is it bad? If there are lesser seats on back of AI, I'm not sure how to look at this, but because that's going to hit your bottom line straight up.
Yeah, so okay, maybe 2-3 buckets. Yeah. I was trying to go through it. So for generative AI business, Accenture has actually had some great deal bookings. So that's part one.
That's a good thing.
Are clients not coming out and spending? So managed services, that vertical has seen growth which is at a decadal low. And that is the key problem for Accenture. The revised outlook, by the way, is 1 to 3% versus 2 to 5%. Yeah. So that's the other piece. And Samina, you very rightly pointed out, Accenture last quarter also was weak. Cognizant last month was not that great either. So they also kind of slanted shaky. So on back of all of that, it certainly looks like demand is not coming back in a hurry. And there's this note from Jefferies. We kind of quoted some of this day before yesterday when we were talking about IT services on the trade on the editor's cut. But they point out that the Nifty IT valuations at 26p, which is a 13% premium to the, I think the note will come up on your screen, Jefferies on IT services. That's the part of my stocks to watch list. But they say that the Nifty IT valuations at 26 PE is at a 13% premium to 5-year averages and 29% premium to Nifty, and that seems rich. So therefore, no reason for Nifty IT to trade at the valuations that it is trading at a point of time when the outlook seems to be so wacky. And the Accenture commentary, Samina, the CEO, Julie Sweet, saying that we see pressure in the volume of our smaller deals, and that's why we have that 1 to 3% guidance for the full year. Unless demand improves at the margin, how will smaller deals improve? And if that doesn't happen, how will the companies be able to give any kind of confidence on the guidance? There's a problem there.
There is a problem, and I think till elections in the US are not out of the way as well, non-committal is big. It's been the key word that we've seen across. So no green shoots, and even in the last couple of weeks, Niraj, I don't think we've heard of too many big order wins apart from TCS that got their regional bank in the US.
Yeah.
We have a little bit of activity on Wipro this morning, but honestly, the last 6 to 8 weeks, it's been quiet. There have been no announcements to the exchanges of any of the Indian tech companies actually winning big orders. And let's not forget, Jefferies has indicated this, that valuations of the sector are still looking rich. So you've got to be selective in the space. You've got to keep in mind that things aren't improving globally, and we've already seen that. So lots of moving parts. So after the dollar, that of course the losses in the IT stocks in India today may be offset by a stronger dollar, but we'll have to wait and see of how trade opens up for this space. Moving on from IT, so Infosys and Wipro, both those ADRs were down in the range of 1.5% to 4%. These will get gap down in today's trade.
Most certainly. And just that one line before we move that, Samina, the Jefferies note also says that weakness in Accenture's EMEA, FS and the communication verticals has negative read-through for Tech Mahindra, TCS and Coforge in particular. So while Coforge and Infosys are the top ideas.
Picks, yeah. So I was a little confused about that because they said this is a negative for Coforge.
Yes, but there is a negative for Coforge. So maybe the reading might be negative for the near term for Coforge, Techem and TCS. Maybe those stocks react a bit more. I think it'll be interesting to see.
Right. So there's that on the IT pack. That is going to be the biggest talking point in the sector of the day from what we expect. Well, along with that, I don't think we've spent a morning in the last couple of days not talking about Tatas. This morning too, we will do exactly that. Tata Communications, they've approved a slump sale of the digital service business to subsidiary Novamish at 458 crores. It'll be interesting to watch out. There's been quite a bit of news flow on Tata Com as well. Yesterday, there were technical analysts giving a buy call on this one. It'd be good to see how the stock reacts. Niraj, this would be viewed as a negative or a positive. I'm not too sure. I mean, a slump sale of a failing subsidiary to its subsidiary, potentially a negative, but because I guess there's an approval coming to do that sale, they could be viewed as a positive, maybe because it comes off their books.
Yeah, one, that, and two, not a very large sum, and
crores,
that important a business now in the larger scheme of things, or what they are trying to do. So
rather insignificant in terms of stock reaction. You've also got Tata Chemicals. Now this is one bad news after the other. Actually, this is the first news that the company has come out and made an announcement which will impact their counter. The income tax department has imposed a small fine in context or relative to the size of Tata Chem, to the tune of 103 crores. Tata Chem will be appealing against this before the appeal against the centre. They expect a favourable outcome on this. Now, whether the markets are going to believe that is anybody's guess, but I would imagine the stock will more than likely get a gap down in early trade. Karnataka Bank, they've also launched a QIP issue last evening to raise funds. The floor price was it's been fixed at 231 rupees. So pretty much at yesterday's close, about 2% off from yesterday's closing. Prestige Estates, real estate has been in a bit of a slump, at least in terms of stock performance recently. But Prestige, widening its footprints across the country, have acquired a large piece of land in Delhi NCR for about 62.5 acres for about 468 crores. So activity robust for Prestige for now, at least, Niraj.
Most certainly. So those are a few things, and Prestige is in news for more reasons than one. Remember, NDTV Profit has it exclusive over the Marriott tie-up as well. That aside, L&T, there's a board meet on March 27 to consider fundraising and a debt sale. So watch out for that stock in the session today in case there is a reaction. Bloomberg learns that Indigo is nearing a decision to order nearly 30 Airbus A350 jets. Remember, plane availability has been a bit of a bummer for Indigo in the recent past as well. But this is the wide body. Watch out for this one. And some brokerage notes before we get in to the political development as well. Remember, a few days ago, Torrent Power won 2 projects. Now, Morgan Stanley's come out with a note on those 2 project wins. They say that they expect both the projects to have downside risks on the currently estimated capex, which means capex could be lower for Torrent Power on both of those project wins. They expect both the projects to generate a mid-teens IRR, which is actually pretty significant as well from that perspective. And Morgan Stanley believes that their FY27 EBITDA can see a 7 to 8% upside as both projects get commissioned. Now, Torrent Power has had a bit of a reaction to these project wins already. Maybe, just maybe, there could be some more here. So do watch out. Look at that chart. The last 1 month has seen a bit of a reaction while the rest of the power space hasn't. So be mindful of Torrent Power today. And some other brokerage calls, I mean, there are a clutch of them out there. But the CLSA note on Aamar, so yeah, we haven't given you the brokerage here, but I'm reading it out, so hear me out. Aamar Enterprises has been raised to a buy at CLSA with a price target of 4,300, but this is a great table, by the way. Indian Bank rated a new buy at Axis Capital, price target of 600. Ceras Sanitary Ware raised to a buy at IIFL, price target of 8230. And Siemens raised to an add at Avendus Spark with a price target of 5101. Certainly, Aamar on CLSA, Samina, seems to be pretty strong because a clutch of brokerages are very bullish on that one.
And we've seen that in the stock. The stock has been pretty much on a tear in the last few days. Also, a quick one, I don't know if we talked about this or not, but Sunil Singhani of Abacus has actually gone out and acquired 1% stake in LT Foods. Remember, LT Food runs the brand called Daawat. They own 50% of the market share, basmati market share in the US. So this will be an interesting one. And of course, they've also gone out and said that the stock, the company could see a growth of 4 to 5x going ahead. The stock has also done quite well, so there's no questions there in terms of how the performance of the counter has been. If I have to just pull that up, the stock has gone up pretty substantially. 85% is the kind of gain we've seen on LT Foods. It's the first time that Sunil Singhani has picked up stake in LT Foods, and they've said that, you know, with the industry now moving to becoming very brand conscious and demand shifting from the unorganized players to organized players, LT Foods could be a key beneficiary. You track Sunil Singhani quite a bit, Niraj. So
no, I track everything markets. But yeah,
big one.
When they bought this 2 days ago, when the stock was at 162, since then the stock has actually rallied quite significantly as well. So interesting moves there for that one. Yeah. Let's wait and watch how this shapes up. But the other big development, as we said, as we move on from stocks to a quick segue into what's happening on the political side, and Arvind Kejriwal getting arrested. Amitabh Tiwari Johnson to talk about the significance of this. Amitabh, great having you. Thanks for taking the time out. How did you read into the overnight developments?
See, essentially, I mean, it's a big move because now we have both the CM and the former CM of a party which was created out of a movement on corruption, now behind the bars. Now, there are many angles to it. One is a political angle, of course. One is a legal constitutional angle, and one is a ethical or a moral angle. Now, who will be CM remains a very big question, because Aam Aadmi Party has said that Arvind Kejriwal will continue as CM from the jail itself. But while legally it could be tenable because he continues to be an MLA and he has not yet been convicted, whether morally it is correct or not, or whether the LG or the central government will intervene, whether this matter will go to courts, now we'll have to see. See, Delhi witnesses a split voting. That is, it votes for BJP in national elections and votes for Aam Aadmi Party overwhelmingly in a state election, which means that it has a lot of swing or a neutral voters. Now we'll have to see whether this creates or generates any sympathy for Arvind Kejriwal or not. That's what he will or his party will try to do. But we'll have to see whether any sympathy is generated. And even if it is generated, does it work in a national election or does it work largely in a state election? It also seems that this issue could bind the opposition together because it was fairly in disarray, and ED raids and targets on opposition leaders could bind them together. Will it become the topmost issue of the elections going forward along with electoral bonds and all? I have my doubts over it. Will it be very detrimental to BJP's grand positioning, let's say, or BJP being the favorite in the elections to win? Uh, that's also not very clear at this moment because Aam Aadmi Party is not a national party. He's not the president of the Congress party. That it could have a significant impact. Now we'll have to see how does this pan out and how does opposition and the ruling party take forward this case.
Amitabh, in terms of what is expected now over the course of the next couple of days, of course, this comes in on the heels of a similar situation that we saw in Jharkhand about a month ago, where the JMM leader and former Jharkhand CM was arrested by the ED in a money laundering case, and they had to go out and frantically look for a replacement. If Mr. Kejriwal doesn't get immunity from the Supreme Court, will the CM be replaced?
So the Aam Aadmi Party would not want to replace him. See, again, because they would want him to continue as CM. Is that what they have claimed? Now that's for legal eagles to see, because he is an MLA. He's not yet been convicted of sorts, correct? So he is eligible to be CM. Now that's a moral or a ethical question. Should he do so? Because as you said, Hemant Soren resigned and gave over the mantle to somebody else. In case of Lalu Yadav, he passed the mantle to his wife. So this will need to be seen, whether he resigns on his own, whether he puts up a replacement, or if he doesn't, do the courts intervene? And if the courts don't intervene, does the central government intervene? Because the LG and the Aam Aadmi Party also do not have a very great rapport, and he could also intervene and take over the reins of the Delhi government. So it's sort of a constitutional crisis which has been created by his arrest.
Amitabh, so as things stand, what is it that now is to be watched out for? Because I heard you say that Delhi has this split vote, swing vote. Does this event bind together the opposition? Does this bring about sympathy votes for Kejriwal? Only time will tell. But in terms of events and timelines, what is it that you are watching out for, considering that we have the calendar out and these developments have happened?
So essentially, we'll have to see whether he gets, first of all, any legal immunity or not. And then we'll have to see how does Aam Aadmi Party make this a campaign. Because ultimately, any issue, I mean, the political parties will have to make it a campaign to reach to the masses and convince the voters that wrongdoing has been done on them or on their leaders through the help of central agencies, allegedly by the BJP. So this sort of messaging, now it's all about messaging, because it's largely also, first of all, speaking to the converted. So voters who are on the side of BJP will largely believe that whatever the central agencies are doing is right, and voters who are on the side of AAP will feel that corruption needs to be tackled. However, it's the neutral voter, and it remains very difficult to gauge now what is the impact of the neutral voter. We should also keep in mind that corruption as an issue normally works for a party which is in opposition. So BJP used it to the hilt in 2014. If as a ruling party you want corruption to work in your favor, then that government has to show action. Now, what's action? Is action putting people behind bars, or is action getting people ultimately convicted? Because we've seen that the ED does not have a great record of conviction. So that's a thin line of difference. So BJP perhaps hopes that this action shows that or strengthens PM's resolves that there is no room for corruption, or he has a zero tolerance for corruption, whereas the opposition will pitch in the idea that there have been no convictions and these are merely political vendettas. So this is a battle which also now will be fought in a legal court as well as in the courts of public. And since Congress and Aam Aadmi Party have an alliance in Delhi, however, numerically it is still weaker than the BJP, because BJP had more than 50% vote share in all the seats, and they have formed an alliance in 3-4 more states, including Gujarat, Haryana, etc. We'll have to see how this issue pans out on a pan-India level. May not be an issue which significantly tilts the scales in favor of the opposition at a pan-India level, though at this level.
Right. Thank you very much, Amitabh for joining us and breaking this down for us and what this really means from a bigger macro political picture. Let's not forget that AAP is hoping that Kejriwal's arrest will stir the people and further consolidate the 12-year-old party. The chance of AAP disintegrating in Kejriwal's absence for now, like even Amitabh indicated, seems very, very unlikely. Well, on that note, we'll take a quick break. Implied Nifty indicates to a flat to lower start. We'll put the spotlight on F&O right after this break, so stay tuned.
The big news of the day has been, or rather the last 12 hours, is Accenture cutting its guidance. Now, we've spoken about it in the trade setup. Let's break it down in detail. Agam Johnson for that. Agam, good morning.
Good morning. Well, so firstly, of course, Accenture has cut its fiscal 24 revenue guidance to 1 to 3% from earlier suggested 2 to 5%. What's really worked against Accenture, and it's indicative in the kind of price fall that we've seen down 9% in trade yesterday, was the fact that their suggestion was that the clients are now very, very tight-fisted when it comes to discretionary spending. Their budgets have also come under substantial constraint, and smaller deals are harder to come by. The reason why smaller deals are more important in this case is because revenue accretion is a lot faster as compared to some of your relatively larger transformation deals where revenue accretion is a lot slower. Moreover, the financial services vertical has seen a decline of as much as 6%. There is weakness in some of your Asian markets as well. And a lot of these factors have a direct implication on the Indian IT sector. Now, what does this mean is that because of the fact that the Indian IT sector gets the most amount of revenues from the US and it gets a majority of its revenues from the financial sector in the US, this commentary could certainly weigh down on some of your names, which would include TCS as well as Infosys. What are brokerages making of this? We have a Citi note which suggests that, well, the forecast suggests tightening in IT spends, and they are also suggesting that the pace of demand and recovery for demand will be a lot slower at the moment. Jefferies, once again, is suggesting that rising weakness in financial services vertical is something which will work against Indian IT companies. And we also have a note from Nomura, where the only positive perhaps is that generative AI can in fact work in favor of some of the factors and some of the positives that have come through in Accenture. But all in all, well, they are very, very circumspect on the kind of implication it can in fact have on the Indian IT sector, given the slackness in demand, which is ever more visible.
Okay, Agam, thanks for putting that into perspective. Maybe you might have a question for Moshe Khatri. He joins in right now, Managing Director, Equity Research of IT Services and Payments at Wedbush. Moshe, thanks so much for joining in. How did you read into what Accenture has done in terms of its guidance cut and the internals, particularly the managed services business?
First, good to be here. I would say a couple of things. I don't know if they said anything new, frankly, in terms of the comments and in terms of where we are in the cycle. So we knew that budgets had been pushed out probably about a month and a half for calendar 24. Typically, budgets are done maybe by sometime in mid-February, early February. Now they're going to be done by the end of March. If budgets are not ready, you have less fresh funding for new programs to start. Obviously, that pertains to the discretionary part of the business. And then on top of that, you also have, and there's one more thing, by the way, that was positive in Accenture's numbers, which is the bookings, which were very strong. But then you have this disparity between bookings and conversion. And I think that's been impacting everybody in the space, including the tier one offshore vendors. So you're getting these huge amount of bookings in the past 6, 9, 12 months, but they're not converting on time. They're taking longer to convert. So it's a combination of all these things that kind of told us that the next quarter is not going to be pretty, and it's going to be pretty muted for the group. We do believe that post this quarter, for Accenture, it was a February quarter and then an August fiscal year, but for the companies that you're talking about, this is a March quarter. Post the March quarter, we should start seeing a sequential uptick in growth. And I think the year will be back and loaded. So it's kind of it's a mixed bag because the bookings are here, but you're not converting them. And that's been the issue for about 6 to 9 months now. And on top of that, you have budgets that are not done yet. They're not ready. And that also impacts spending on discretionary. And I think that's what Accenture's numbers tell you. The bookings, again, decent bookings, but will take time for these to convert. And it's been the case for the industry for a couple of quarters now.
Moshe, hi, it's also Samina joining in, and we spoke to you last quarter around the same time when Accenture had reported earnings. And you were and that was very soon after you had made a trip to India, where you had met a whole bunch of Indian tech companies as well. And you did indicate that things for the Indian tech companies wasn't as bad, and things were not slowing down as badly as the street was expecting or seeing it as. Any updates on spends, on order wins? Because honestly, in the last 8 weeks, none of the big tech companies have reported to the exchanges about any big order wins.
Yeah. Last we spoke, it was more about the quarter, and I said the quarter was better than feared. And I think that's where we are. We're kind of stalling for a couple of quarters where things are not getting worse, but they're not getting better. In order for them to get better, you need to see these bookings convert. And that's the bigger issue here. You're right. We have not seen any large booking announcements year to date. But again, some of the companies will tell you that not everything gets released or is announced, and these tend to be pretty lumpy. So, but ironically, even if we see deals announced, they're not converting. That's the issue. It's a very unusual situation that I have not seen, throughout the years that I've covered the space. Clients awarding contracts, but they're not converting, and they're telling you to stall until they get a better feel on the macro and, on Fed's cutting rates.
Sure, why are they not converting? I mean, the Fed, of course, is not. I read Vanguard this morning, and they said they don't even expect the Fed to cut rates this year. You have elections later this year. If there is a commitment and there is no conversion, how do you read it? I mean, how do these tech companies make decisions at this stage?
So Chairman Powell did indicate that he expects about 3 rate cuts this calendar year, later this year, so that it will happen. The question is when. And then I don't have a good answer for your question. I don't know why award a contract while knowingly that you're not going to convert, immediately. And again, it's a very unusual situation. And I don't really have a good answer for that.
Yeah. What are you doing with the Indian tech companies? Are you constructive? And if yes, anything specific that you like, any specific themes that you're following where you're feeling a little more constructive? Because I do know it's the smaller ones that seem to be maybe a little more frugal and hence better placed at this stage, at least for what we are looking at it from this side of the world.
Yeah, we do believe that, as I said, post the March quarter, we should start seeing an inflection point in terms of sequential growth in the group. We like Infosys. We cover it. We have an outperform rating on the stock. We like some of the smaller names. We like Cognizant. We like some of the names that have more of a global delivery model, including Eastern Europe, Latin America, and India, like a Globant or an EPAM. But again, the March quarter will be a muted quarter for the group. And after that, we should start seeing that inflection point.
Moshe, just one last question. People are talking about subsets which might be doing better. ER&D has had some order flows, LTTS and some others. I don't know how closely you look at them. And some of the smaller names, like the ones which are in the enterprise business and catering to the Middle Eastern geography, the Indian banking vertical companies, enterprise businesses, they seem to be doing okay too in terms of order flows and closing products maybe. Any thoughts on that aspect of the Indian IT space?
Yeah. And you are correct. There are some pockets of strength. I mentioned a company called Globant. Globant has an outsized exposure to Latin America and to the media, sports, and entertainment vertical. And that vertical is doing, relatively better than some of the others. So that company, for example, is guided for 16% growth this year. So, yeah, I think when you look at the group, you have to look at the end market in terms of regions, and you have to look at the vertical exposure. And based on that, that actually should kind of give you a feel on how well this company should do based on their end markets, if you will.
Okay. Moshe, thanks so much for joining us and giving us this perspective. And really appreciate and have a great weekend.
Thank you. You too.
All right. That's the view from Wedbush on, I think, a bit more constructive than what I would have thought, but at least Moshe Khatri is. Let's see how the stocks behave today and whether they see a bit of bottoming out or no. It certainly will pull out the index lower, Agam, isn't it? Let's get him in now for the derivative cues. We are maybe 5-7 minutes late, so viewers, apologies for that. But it was important to talk about tech, and now it's important to talk about the derivative space. Good morning yet again, Agam.
Yeah, well, ever since, every time you see a little bit of an improvement in the index, you tend to have cues which in fact weigh down on them. And today, IT sector, it does seem like it's going to weigh down on the Nifty. That said, yesterday was a day of improvement. We saw short covering in the bank Nifty. The Nifty once again reclaimed 22,000. So those are the two small positives coming through. But it does seem like, well, things could perhaps once again get just a tad bit rocky going into today. The Nifty futures saw unwinding. And again, this is playing out to the trend through the last 15-20 sessions. The Bank Nifty, again, we did see unwinding, but this was on a bout of short covering. As far as your weekly options go, and we are going into a new week at the moment with in new weekly options expiry coming through, concentration is around the 22,000 mark in terms of calls as well as puts. Even if you look at the maximum open interest, your overall open interest distribution, you'll see that 22,000 has the one with maximum open interest in calls as well as puts. What does this mean? It does mean that at the moment and over the course of the next few days, traders are expecting the Nifty to consolidate further, move in and around 22,000 at the moment. In terms of stocks, it was a good day of trade. We saw a lot of longs coming through. Coal India, L&T, SRF, Tata Steel, SAIL, all of them looking at an up move with an addition in open interest. And in fact, even in terms of stocks, which saw a decline in open interest, had an advance in their underlying. So about a short covering for Glenmark Pharma, PVR, Inox, Indus Tower, HAL, as well as NMDC. So a whole lot of these companies have seen, factors play out. So that's something that we are going to will be watching out for as we move into today's day of trade.
Okay, that's interesting. And do we have Amardev Singh, in which case we can try and get some of the strategies from him. Aamar, I'm sure Agam has questions for you, but very quickly, just an opening here. Good morning to you. Are you trading the indices via the options route?
Yeah, very good morning. Yeah, definitely. What we are seeing is that the indices are consolidating, and that's a good way to play. You've got to watch out for the levels because yesterday from the highs, we witnessed some sort of selling there. So on the downside, I would say anywhere between 21,800, 850, 900, that's a very strong support zone. So any pullback of 100, 150 points, that's a buying opportunity because if you look at the trend, remains positive. If you look at the derivatives data, that also is, if you look at the next, for the monthly series, that's bullish. So clearly tells me that there is some upside, but yes, upside seems to be capped around the 22,200, 250 zone. It's more of a trader's range with no clear-cut trend in the short term.
Right, Aamar, so can you take us through Siemens? I believe you have a call there, and this one has been showing a lot of strength of late.
Correct. So if you look at Siemens has been on an uptrend. It did consolidate for a few days. Looking at the technicals data, that continues to be very strong. Looking at the derivatives data, there we are witnessing long build-up happening, and the stock continues to trade at record highs. So this is one stock one can look at from the futures perspective. March futures, any pullback towards 4900, 4920, that's a good level for entry with a stop loss of 4780 and a target of 5330 on the upside. And the second stock to look at is from the finance space, that is Muthoot Finance. Again, this is one stock which has been consolidating last couple of days. The stock has been strong. Weekly, the stock is up by more than 6%. Monthly, the stock is strong and positive. Daily also, we are seeing a pullback in the stock. Derivative data also clearly shows that there is long build-up that is happening. So one can look at a bull call spread here, buying a 1400 March call option at 40 and selling a 1440 call option at 19 with a stop loss of 10 and target of 45. So these are the two picks that one can look at.
Interesting. Aamar, when it comes to Muthoot Finance specifically, do you think that considering there isn't as much time left for the March expiry, you could perhaps just go ahead and buy a call instead of, in fact, playing out a bull call spread? What is the difference between the two?
Yeah, so basically bull call spread basically helps you tide over the time decay to a certain extent. Buying a call is a good option provided your timing is perfect. So if you look at yesterday, the way Muthoot Finance rallied, or if you go back to the previous day, Muthoot Finance, this call was trading around, this 1400 call was trading around 4 rupees, and which is currently trading around 40. So major move has already happened in the stock. So going for a bull call spread would be more appropriate rather than entering at the current levels for a buy call.
All right, Aamar. Well, we'll leave it at that. Thank you so much for joining us and taking us through your views in the markets and also giving us a handful of stock trading ideas. With that, it's back to you all.
Thanks, Agam. That was the FNO picture, trading calls coming in from Amar Singh DOV. Also with us, Kush Bohra, founder at kushbohra.com, joining in with his view on the markets. Kush, morning. Thanks for joining in. It was quite the pullback in yesterday's day of trade. This morning, though, a little subdued. At least that's what the implied Nifty is indicating. And IT could be one sector that could impact the index. On the Nifty, what's the trade?
Hi, Samina. First of all, a very good morning to you, to all the panelists and all the viewers. Well, I wouldn't call it entirely surprising because, we've been talking about that range of 21,800 to 22,200. Now, while the Nifty did dip below that 21,800 mark, we didn't really close below it. And I think everything happened, that happened in the global space, perhaps just, brought us right back on that 22,000, the pivotal mark. From here on, I'd be surprised if Agam already didn't flag off the 22,000 put base that we are seeing for the coming week. Now, that alone for me is, testament to the fact that the market is believing that the 22,000 to 21,800 zone will perhaps be protected in the near term. So I'd actually go out and say, play the range. If you get any kind of dips closer to 21,900, 21,800, again, it'll not be a bad idea to initiate a long position. Just a little wary of initiating it here because, as you said, the IT effect will start playing out. Plus, what we've seen is that, during the expiries, or at least around the weekly expiries, what happens is the index tends to close around these, these round figure numbers. The next week is a truncated one, so we might see a truncated activity also. So 22,000 remains a pivotal range. 21,800 to 22,200 is the range, and I'll play the range. Bank Nifty has a very strong risk-reward ratio going for it. So, 46,400, 46,300, any dip closer to that level, I'll be a buyer for targets of 47,100 and 47,500. So that's the overall view. Still, I would say it's a buy on dips kind of, a market, but perhaps with a slightly smaller ticket size.
Right. Around the second week of March, there were a couple of analysts, Kush, who were giving out buy calls on ITBs. And of course, there were movements in that space. We did see a little bit of traction too. Now, this morning, if you're still running those positions, what does one do? I'm a little confused because suddenly the commentary is now, it's turned for the bad.
It has indeed. And so IT for me is now starting to shape up a lot like metals, except for the fact that, the metal space is a lot more volatile and, the IT space isn't. Now, if you see a lot of these big names, including TCS, Wipro, some of the names that we've been constructive on, even they've gone into, a sideways consolidation mode with a negative bias. So here, I think, you should hold on to some of these positions as long as, the global commentary remains positive, the hopes of rate cut remains alive. There will be these bouts that, you'll see in the IT space. Now, even the mid-cap space, in the IT names, which was doing rather well, is perhaps starting to give way. And, that is a cause of a concern. But on the whole, I will hold on to these positions. Even though there is a negative bias, most of these names haven't really gone into a structural downturn just as yet. So hold on to some of these names. There will be pressure. The movements may not be as sharp on the on the way up, but constructively, structurally, nothing has changed too drastically.
Got it. Kush, good morning. Niraj here. What are the stock recommendations for the morning?
Morning, Niraj. Couple of stocks. Indian hotels, seems almost unaffected by whatever is happening around it. So, that stock remains a buy. Any kind of dip, will be an opportunity to add more. From the near-term perspective, 575, 585 are the targets. 555 is where I would place my stop loss. One stock, which is a fairly recent listing, but seems to be, on a very strong footing, is Jyoti CNC. This is a cash stock. This stock too, in the near term, could see an upside to say, 655 levels. 620 is where you could place your stop loss. So a couple of stocks, and these are the names where, any kind of dip should actually just prove to be buying opportunity.
Okay. Well, Kush, while we spoke about IT, the other space which has done really well in trade yesterday were metals. Across the board, there was buying seen. Is this yet another false breakout, or do you reckon that the chart showed some more upsides for the metal names?
So, Niraj, it's a very mixed pack kind of, a scenario. I have a couple of names which, I will continue to buy, continue to hold, even if there is any kind of averse a condition that arises globally. Tata Steel is one of them. Hindalco is one of them. So these names, as long as my charts don't tell me otherwise, and which they haven't been telling me, I will continue to hold. Can't say the same for a lot of other names. So metal. My suggestion is it's only for those traders who have a very strong risk management system in place and can handle volatility, and be extremely selective here. This is not, like the PSU rally that we saw, that, practically everything you bought was about, 10% up in 2 days. Here, the volatility aspect will play out. I'm not saying that, even with the kind of moves that we saw a couple of days, or rather since a couple of days in the metal name, these names have perhaps resumed an uptrend. So for me, it remains a very selective space. I will focus on the likes of Tata Steel and Hindalco. Everything else will perhaps be, a momentum play, on the day.
Yeah. Kush, stay with us. We're getting off a pre-open trade as well. It's going to be interesting to see how the Nifty opens up, how the IT pack opens up. NDTV Profit, of course, could be seeing a gap down in trade. We'll take a break. We'll come back. We'll continue our conversation. And, of course, we'll also talk to Veranda Learning on their fundraising plans right after this break. So stay tuned.
Quick updates from Veranda Learning, because they expect revenue growth of 100% in FY25, and presume in order to do that, they're pulling out all stops, including raising some funds via NCDs. Not a very large fundraise, and again, not an equity dilution, but an NCD fundraise. But Mr. Suresh Kalpathi joins in right now. Mr. Kalpathi, thanks for joining in. Is this the only fundraise that you would do, or would you also do an equity fundraise at some point of time?
Thank you for the opportunity to be on your channel. First is, for us, it's a reinforcement of faith in the resilience of the platform that we are building, that Barings Credit would lead this fundraise for us. This is an NCD, it's a debt instrument, so there's no dilution involved with this. This allows us to complete a couple of acquisitions. This adds another set of 20-odd schools and 10 colleges that comes under the management of Veranda Learning. And also through acquisition of SmartBridge would make us potentially the largest online virtual internship platform for software training in the country. We will continue to stitch the ecosystem together. There is also a green shoe option with this that will hopefully part finance the next raise that we would do, which would be largely equity-like instruments, convertibles, that will allow us to sort of complete this journey of acquisition and fulfill our ability to completely stitch the platform together. So we expect to complete the next one over the next 3 to 4 months. And that will allow us to take our profitability to, with the acquisition that we are targeting, to potentially about 400 crores of EBITDA for FY25. And we expect our sales to double to cross the 800 crore mark for FY25.
Sorry, did I hear you say 400 crores EBITDA for FY25? Because from a 233 crore EBITDA in FY23, you're virtually guiding to doubling the EBITDA by FY25.
The current businesses that we have will expect us to double our EBITDA going from 24 to 25. Acquisitions that we are targeting will allow us to reach the 400 crore mark. We have always believed in acquiring businesses that are having pedigree and significant profitability in the markets. So that would add to the strength of what we are building. And as I mentioned, over the next 3-4 months, we'll come to an end of our significant acquisition cycle. And post this, it will all be organic.
Got it. Mr. Kalpathi, one more question. Did I also hear you say that there will be some equity-linked fundraise that you would do? Could you just clarify what's the size of this equity fundraise, if you will?
It would be compulsorily convertible type of instrument. So it would be equity. We just want to ensure that we keep our debt EBITDA ratio to probably about 1.5 to 1.75. So we want to stay under leverage. So the next fundraise will be equity-like. This could potentially be anywhere in the range of between 800 to 1,000 crores of raise.
Sir, hi. It's also Samina joining in. Early this year, there was news about you taking over Tapasya Education Institution. Can you bring us up to speed with what's happening there? I guess you've already gone out. The first stage is done or will be done in the next few weeks. When does this turn revenue accretive? What are the couple of stages? And when will this acquisition be completely done and dusted with?
We expect to actually complete the acquisition, Samina, by early next week.
Oh, okay.
And we expect the full benefit of the acquisition to show as part of our FY25 numbers. And again, Tapasya will allow us to include an additional 23 junior colleges that we would manage and 10 colleges that would come under the management of Veranda.
Okay. Well, Mr. Kalpathi, we wish you all the best for this and more. Thanks for this quick update and all the best with the tall targets. Hopefully do even better than that.
Thank you very much for the opportunity.
Not at all. That's Veranda Learning, targeting some pretty stiff growth for the course of the next 12 months. FY25 growth numbers targeted at 100%, both on the EBITDA as well as on the top line front, if I'm not wrong. At least on the EBITDA front, they've just guided us to that as well. Pull up the 1 month chart and the stock has corrected quite significantly. I wonder if, Kush, you've ever looked at this company. It's not a very large one, 1,300 crores market cap, so small cap in that regard. Any thoughts on Veranda Learning?
Wait and watch a little, Niraj, on this one. For me, the support zone comes in at about 182, and then if that is taken out at 166, 165 kind of zones, it's just that, this entire space hasn't really been a great wealth creator. And, I'm talking from, a few years of experience and, a few other stocks which don't even exist, anymore in the markets. So just a little watchful. The stock particularly, as you rightly pointed out, has been in a bit of a downturn. No signs at the moment of any kind of recovery. So I'll wait if the stock does indeed take support at, those 180 levels and does attempt a rebound.
Sure. Two big movers from yesterday, BSC and IRB Infra. Do we have a strategy on both these stocks this morning?
So BSC from a medium to a long-term perspective, for sure, is a buy. In fact, just as a disclosure, we had recommended this to our clients a couple of days ago. So that's a standard disclaimer. From a near-term perspective, also there is momentum, but just that the kind of momentum that we saw yesterday and today, plus the stock resisting near the 20 and the 50-day moving average, there's a possibility that we might see some sort of profit booking. But this stock is for sure a buy and hold kind of a stock. From a medium-term perspective, we're looking at a target of 2555, 2555, and once that is taken out, even 2700 is on the cards. So BSE continues to remain a buy. Samina, I'm sorry, which was the second stock that you mentioned?
IRB Infra. Kush?
Yeah, I'm afraid I'm having some difficulty loading that chart. If you could excuse me on that.
Yeah. Also, anything on OMCs? BPCL, HPCL, IOC, these have also become pretty active in trade as of the last couple of weeks.
They have, but I would give it some more time, because what we're looking at in some of these names is perhaps a rebound play. The one stock that stands out for me is IOC, and I will have this on my radar if I'm looking at any kind of a fresh entry. But some of the other names, they haven't really broken out of the range or the resistance levels. Then the move that we saw in the last 2 days could very well be just a dead cat bounce, and might just fizzle out. Or in fact, if not that, the stocks could consolidate, over the next week or so. So for me, IOC stands out, but other than that, I will be a little wary before I, park big money into, some of these names.
Okay. Well, viewers, the pre-open is about to kick in. We'll mark chemicals in a moment, because remember, SRF for the last few days, for example, has had a good move, and apparently one of the reasons could be that the prices of BOPP film have increased 10% month-on-month, which is potentially a positive sign for SRF's packaging films business. Even as the raw material prices of polypropylene have gone up. This is as per a Kotak notes. I'll mark that in just moments from now. But just to tell you what the pre-open rates, they are irrelevant in the first few minutes, but just mark them as a token. Well, all over the place. Let's give them a chance to settle, and we'll talk about them in detail. Now, here's the interesting note. I will take in Kush Bohra's view on that, because SRF has had such a good move, and also we're in a fundamental guest on the same. But the Kotak note states that prices of BOPP film have increased 10% month-on-month, which is potentially a positive for SRF's packaging film business. So watch out for SRF. If you look at the last few days, it's actually had a good run. There is some pricing pressure on certain contract manufactured products, which is a negative for NFIL, which is Naveen Fluorine. So that's to be kept in mind. There is a competition for PI Industries and its customer because of new shipments by Aztec. So that brings PI into focus. And last but not the least, just at the risk of making you confused, but making out that as well, that there are market reports which suggest that a shortage of nitric acid, which is a key raw material for Deepak Nitrite and RT Industries. So watch out for RT and Deepak Nitrite as well. Remember, phenol spreads are under pressure. Soda ash prices are under pressure. So therefore, the Tata Chemicals and the Deepak Nitrites of the world might have an issue. So 2 or 3 stocks, per se, that stand out in this chemical space. One is Tata Chemicals. Soda ash under pressure. Tata Chemicals has come off quite a bit recently. Phenol spreads under pressure and nitric acid shortage. So Deepak Nitrite might have an issue. And SRF has some positives because of the developments that I mentioned on this. Now, Kush, chemicals have been chalk and cheese. Some have done well, some have not. I'd love to understand from you, from these 3 names, which is Deepak, Nitrite, Tata Chemicals and SRF. Is there a trade possible on any of those?
So the only trade that I see on the long side is on SRF. The stock's actually broken out of a few key resistance levels, 2500 being, the last one of them. So there's a positive trade that has to be played on SRF, for sure. There was volume-backed move yesterday also. The other 2 names, not so much, but, along the way, you did mention a couple of stocks. So if I could just get a quick word in. PI Industries too actually has done well, continues to consolidate with a positive buy. So here you could see an up move continue. And RT Industries, the stock that also was mentioned, it's on the cusp of a breakout. So if I were to rank, then for me it would be SRF, PI Industries and RT Industries. The other names, I had a scan, and we've also been looking at the chemical space. Right now, there isn't much to tell that, there's a long trade to be played on the other names. So these are the 3 stocks that I'll have on my radar.
Right. Kush, what would you... Okay, just stay with us. We'll come back to you in a minute, but it's 2 minutes past 9. It is going to be the IT pack, like Niraj said. Tech Mahindra, Infosys, Wipro, Coforge are stocks that are going to get a little bit of a beating in early trade. But we've got with us Harsh standing by as always with a quick list of brokerages and their calls this morning. Brokerages, Harsh, couple of good sort of buy calls coming in on the likes of Shriram Finance, which is a top pick due to its healthy loan growth from, of course, Jefferies.
Well, yes, absolutely, Samina. Healthy loan growth on the diversification of their portfolio expected by Jefferies, and that's where the positivity is coming through, and with regard to comfort on valuations. But let me also talk about some other triggers. One is, one commentary coming through is they expect credit costs to remain benign over the FY24 to 26 period. So that's one positive. The other positive also that Jefferies talks about is that margins will not erode in a big fashion, will remain quite stable. So that's in a certain sense a positive given the current environment. Now, where your valuations are concerned, currently trading at around 1.6 times price to book, largely in line with the 5-year average price to book that Shriram has traded at, and that's where Jefferies is finding comfort. What they are suggesting is that in an era where growth is going to be strong, as well as there is profitability, lower credit cost, this kind of valuation could therefore leave room for upside. They've given it a target price of 27.50, Shriram Finance. Quickly moving on, you have a Kotak institutional note coming in on Brigade as well. They've upgraded Brigade to an add. They've left the target price unchanged at 1,025. What they're suggesting is a 16% correction in the stock price leaves a window for investors to basically take advantage of this correction. Now what they are suggesting is with regard to the construction ban across Bengaluru, that's been the fear and that's been one of the reasons for the correction as per Kotak Institutional. They're saying that strong prospects on development, leasing and hospitality gives this one a good upside. Currently trading at roughly 6 times EV to EBITDA on FY26 estimates. They are positive on this one, and this could be an opportunity to add actually Brigade. So Brigade 1025 target price, Kotak with an add.
Right, that's the call coming on Brigade. It's a pretty aggressive target price there as well. Along with that, there'll be a whole lot of stocks that will be reacting in today's day of trade. Brigade is indicated to open flat. Tech really will be grabbing the limelight in early trade this morning. Well, we also have with us Dipan Mehta of Elixir Equities joining in. Dipan, good morning. Thanks for joining in. Dipan, how have you read those numbers coming in from Accenture? And as that as a backdrop, what would your tactical play be for the IT stocks this morning?
Yeah, good morning and thank you for having me on your show. Yes, it's a mild disappointment that they have cut the guidance. But beyond that, I haven't gone very deep into the numbers. But this is, I mean, to be expected, given that tech spending has not yet picked up in US and the rest of the world. But I'm cautiously optimistic on tech, and I do feel that second half of 2024 and 2025 year may be good years for the technology sector for two reasons. One is that unlike past situations when the tech sector was stressed because of lower spending, this time around, they are sitting on very good order book position, but just the implementation has not yet started. The billing hasn't started. And once I think there's more stability in US and Europe economy, we should see pickup in spending over there, which means that revenues should start to grow in what we expect them to grow at. At the same time, this artificial intelligence thing is another big wave for tech companies, like we had from so many waves we have had in the last 25 years or so, right from Y2K to internet to remote management. So there are many such opportunities within the AI space, which Indian companies can certainly explore. And that will lead to higher tech spending maybe a year down the line or so. So keeping these two in mind, I'm cautiously positive. But valuations right now are pretty much fair. So at corrections, there would be some sort of margin of safety.
Viewers, mind that at corrections, there could be margin of safety. Dipan is not talking about going in right now. Unless I'm wrong, he's also not very constructive on the markets as well. So that's to be kept in mind. Dipan, good morning. Niraj here. We're starting to see sporadic, actually not sporadic, pretty linear set of notes coming in for the banking names, talking about how valuations are the most attractive that they have been today. There's Bernstein, which is coming out and saying 5 charts and 1 message. HDFC Bank circa has never been so attractive as ever before. I'm just asking you, would you put in money to work here, or would you say let the tide turn? It's okay to buy these stocks 5% higher, but might as well buy when the trend is changing.
See, I think, Niraj, first of all, good morning. All depends upon the complexion of your portfolio. And the real problem with HDFC Bank and the private sector banks is that they are overowned. So in a portfolio, if you don't have adequate exposure to private sector banks, then this is a good time to add. Even though our view on the market may be slightly negative, I do feel that private sector banks will outperform even in a falling market, which means that they will fall less than the overall market. And if you're sitting on extraordinary cash in your portfolio, then it's a good strategy to buy into safe stocks like the private sector banks. I mean, if you're positive on India and Indian economy, then you can't be negative on India's largest private sector banks, like of HDFC, ICICI, Kotak. And I completely agree with the brokerage note that in terms of valuation, these are kind of historically low valuations for these companies. No doubt growth rates, of course, have petered out. They were not like 25-30% what they were 3-4 years ago or so. But nonetheless, I think, keeping in mind that these companies can easily grow and mid-teens or so, the valuations are pretty decent. A lot of these companies are now available at less than 2 times, 1.5 times of price earnings growth, which is amongst the cheapest benchmark if you compare to similar companies of same scale, same potential, and same level of corporate governance.
Yeah. That's the call coming in on HDFC Bank. Like Niraj said, it's brokerages that seem to be of the opinion that private sector banks could be a good play in the market right now. Looking at pre-open, it looks like it's going to be a very rough start for some of those mid-cap IT names. Stocks like L&T, Tech, Birla, Soft are all seeing a cut of 2 to 3% each at the least. That's, of course, opening gap downs that we are anticipating in trade. On the upside, you've got actually Bharat Dynamics, HAL. Kush, it's been a few weeks. We've not talked about some of these defensive stocks because they all fell 30-40% in the last couple of weeks. But they're once again finding their feet. On HAL and Bharat Dynamics and any other defense play, do you have a trade for a pullback?
So HAL and BEL, these are the 2 stocks that, have taken support at key levels and have attempted a rebound. So these are the 2 stocks that I have on my radar. Again, despite the kind of dip that we saw in these names, these 2 stocks, stand out. There haven't been really, as deep a correction, as we've seen in some of the other names. So BEL and HAL are the 2 stocks that, I will have on my radar. BDL is attempting a recovery, but, the move's just not as convincing yet. Plus, on the up move, the volumes really haven't been so great. So I'll perhaps wait and watch a little on BDL, but HAL and BEL are the 2 stocks that I have on my radar.
Dipan, PSUs having corrected so much recently, do they now look a bit more attractive, or would you still be skeptical? I mean, I don't know if you were skeptical in the past, sorry. So let me rephrase my question.
No. See, we haven't been great fans of PSU for obvious reasons. I think it's a bit of a baggage that a lot of investors carry, having seen PSUs not go anywhere for the past 20 years or so. And these companies are really playing a very strong catch-up as of now. Now, certainly the prospects for a few companies has improved significantly, and I would say long-term prospects. Let's say the likes of companies which are engaged in capital goods, be it railways, be it power. I think those prospects certainly have improved. They are sitting on multi-year order book positions, so there's good earnings visibility, and hopefully they are at good, decent margins as well. So at corrections, I want to buy into such companies where there's good earnings visibility, and they typically fall into three buckets. One is, of course, the defense companies that includes even the shipbuilders. The second is the likes of BHEL and BEML, which are into pure play capital goods manufacturing, be it power plants or whatever engineering work they do. And then the third is the railway company. So these are the 3 I would like to focus on more. I'm not that positive on PSU banks. As I said, we discussed earlier, I'm more positive on private sector banks. I think if you have to allocate money to the banking sector, then private sector banks, NBFCs like Bajaj Finance, Chola, I think may outperform on a 3-year time frame. more than even the PSU bank. So that's the way I'd like to play the PSUs. But even in the capital goods engaged PSUs, the valuations are on the higher side. You want to buy them at around about 15 times, 20 times trailing 12 months. And these companies are quoting at 25 to 35 times. So I think in a correction, you could look at them or then wait for them to catch up.
Dipan, one quick question just before we go into market open. Your top 3 stocks that you're adding to or will add to your portfolio at tips?
No, I'm not giving that list because I'm not adding anything to my list just now. And as I said, that our view on the market is cautious. And although the markets have been rallying the way they have, and we haven't seen any serious correction, but at this point of time, I'm just holding on to cash and waiting for keeping the powder dry to look for.
So Dipan, how much dry powder are you currently sitting on, if I may ask?
It varies from portfolio to portfolio, but my advice to investors would be that you have to have at least 10% cash in your portfolio, and maybe even higher is better. Right now, I think it's not a great time to be fully invested in equity, but I do have another idea for you that maybe in 2024 and 2025, something which I never bought may do well, that is income funds, because interest rates certainly have peaked out in India and globally, and interest and income funds are quoting, I would say, income instruments are quoting at, I would say, nearly all at fairly good lows, from where you are assured of a fixed income because of the interest coupon. And should there be any cut in interest rates for whatever reason, or even could be even inflows from FIIs, then a rally in the bond market can make income funds extremely attractive. And there's a great deal of safety of capital. So that's one new idea I just want to place on the table. We normally don't talk about income funds or that kind of allocation, but this is something which has been playing on my mind.
Fair call. Gentlemen, both of you, thank you so much for taking the time out and being with us. Really appreciate your time this morning. But just 5 seconds left for the markets to kickstart trade. And we'll have a start which is in the red, courtesy IT. The question is, can banks and some of the others recoup that? It's about 1/3% or 0.5%, and courtesy IT. Nifty IT should come up on your screen. You will see up over 1% or 3% actually, kind of a cut here. Quickly, mid caps also, maybe a lot of IT names might be in the red, and that might be maybe pulling the index a bit lower. But let's just quickly move to the heat map and let's see the space out here dominated by IT losses. HCL Tech 4%, Wipro 3%, Tech Mahindra, Infosys, LTI, TCS. 6 of the top 10 losers are IT names. I haven't seen this rate for a while, not even when Cognizant numbers were weak. So clearly, there is a larger green, but the index is still in the red, courtesy what's happening to IT. Now remember, this is also the first reaction. Maybe the stocks will be different as the day goes by, but it's evident that there is no demand recovery as yet, as Accenture has said. Remember, there's a note which I read which said Accenture's generative AI order book is more than the combined order book of the top 10 IT vendors in India. So that also tells you a story that that company is still doing well there. Maybe some of the Indian IT companies need to play catch up, but clearly pressure here. Okay, aside of that, not too much else. HDFC Life, Tata Steel maybe minorly in the green, in the red. And what is in the green? Sun Pharma, there is Titan, UPL, maybe a little. Adani Enterprises up about 1%. There is a note today from Jefferies on Adani Enterprises with the target price higher than the current price as well. ITC marginally in the green. But really, Samina, there's not much to talk about this Friday morning aside of what's happening to tech. And tech is taking a serious beating.
Yeah, but I do think, Niraj, with the rupee seeing a gap down and the dollar looking stronger this morning, maybe those losses may recoup a little bit. But of course, for now, it's a pretty ugly screen for IT. And those are some of the top stocks on my broader market list as well. Across the broader market tech play, it is a sea of red. So from your Coforge to your L&T Tech to Emphasis to Birlasoft, that whole space is seeing a cut of about 3% odd. So irrespective of what the companies are doing, whether in the service side or the product side, or even if it's ER&D, the markets are doing a blanket sell on tech companies. Remember, it was only a few weeks ago that the biggest buy calls that were coming out from technical analysts were on ITBs. So that trend clearly changed pretty much overnight for tech stocks. Yesterday was a good day as well, remember, because of the Fed reiterating that they will go with 3 rate cuts, but that excitement only lasted a day, with Coforge, Memphis, L&T Tech, Birlasoft all seeing a cut of 3% in trade. Well, you've got a few more stocks that are on our radar. So if I can pull up Tata Chemicals, the reason I'm pulling this one up is not because the news flow is that significant, but it's also trading flat. So clearly what we thought was right, the stock not reacting too negatively to getting penalized for 100 odd crores. They are going to appeal to the appellate court, and it'll be interesting to see how that reacts. And the stock might be reacting positively because there's a good chance that there could be a positive reaction to that. Prestige is up 5% in trade this morning. And now why is that? Because Prestige has been aggressively widening its footprint span India from being a south player to now, of course, in the north and in cities like states like Maharashtra. Prestige has acquired 62 acres of land in Delhi NCR. It's a big buy coming for Prestige, and the markets seem quite excited about that. So the stock is trading with a gain, a pretty big gain of about 5% in trade. Apart from that, you've got a couple of brokerage updates. Aamar Enterprise, Niraj talked about this morning. The stock has been on the move in the last few days, continues to do well, 3.5% on Aamar Enterprise. CLSA has increased their target price to 4,300, on back of which the stock is up 3%. Indian Bank has also been upgraded, and so has been Cera Sanitary. Cera Sanitary is still picking up. It's up about 1%. It's a buy call from IFL. Over the course of the day, you will see some more buying emerging on this counter from what we see it as. But Niraj, all in all, IT is dragging the index, and if the markets were looking to take profits after yesterday's rally, they found one in the IT pack.
You bet, and that's probably what has done this on the index today. Nifty IT down 3% is a very strong blow, and probably an apt reaction to the internals of Accenture. 3% lower for Nifty IT. In a bit, we'll get in Gautam Shah and talk to him about his thoughts as well, because it's important to put the charts and long-term charts into perspective as well. But this doesn't look that great. What else? Actually, let's talk about the positives as well, because actually, if you go to see, the mid caps and the small caps are not doing that badly. So Sterling Wilson Solar is the top gainer, up about 5%. Today, Metro Brands, which has had a week full of ebbs and flows, has done well. Indus Tower is about 2.5%. Keep an eye out for that too in the session today. I wonder if Vodafone is active, which should bring up V and see what's happening with that stock. Vodafone is up about a couple of percentage points as well, so keep an eye out for those two names. There is Sona Comstar, which is knocking on the doors of 700 yet again. Remember, it was up about 4-5% yesterday and up around the 1.6% today. So that's the other stock to focus on. Motilal Oswal Financial Services is up 1.5% at 1628. Yesterday, MK had a positive note. The stock, along with BSE, was up yesterday and is up again today. Actually, on that note, wonder what BSE is doing. That is up about 0.7% as well.
Just a few more, Niraj, to add to that list. You've got Masgaon Docks. That stock is doing really well this morning. Opened 2% higher, now trades 4% higher. They've accepted in the offer for land and building allotment. The total allotment comes in at a cost of 350 crores for a period of 29 years. You've also got Sarda Energy, small stock, but it's up 4% after the JV unit gets a clearance for iron ore block in Maharashtra. 4.3% on Sarda Energy is what we have. Interglobe Aviation, if we can get that one on the screen, very ambitious plans there, and the stock has been on the radar for a number of brokerages, traders, 1% higher on back of their aggressive expansion plans. But along with that, Prestige has fortunately taken the whole real estate sector higher this morning. You've also got stocks like, if we can get those ones, Brigade Enterprise, it would be interesting to see. Prince Pipes had an upgrade this morning, so stock doesn't look bad. SRF, Niraj talked about this morning, is seeing a good move as well. We have with us Gautam Shah, I believe?
Yes, we do. So Gautam Shah, founder and chief strategist at Goldilocks Premium Research, joins us on the show. Gautam, great having you. It's been a while, so thanks for taking the time out and being with us.
Thank you, Niraj. Good morning. Happy to be here.
Yep. Well, happy to have you. Gautam, should the markets be happy by virtue of the Fed meet yesterday, does it change the trend which was otherwise looking pretty sketchy, particularly for the broader end of the spectrum?
Well, I don't think so. I think the market is definitely looking a lot more energized, more US and less world equity markets. But I do believe that we have our own positives. Clearly everybody talks about the liquidity. But at the same time, I think given the kind of crazy up moves that we saw in the last couple of months, I think a cleanup was always required. And I think the market went through an absolutely amazing internal correction, because when you look at the headline indices, you feel that nothing has happened, but you actually speak to people on the ground and talk about how the portfolios are doing. I think in general, stocks are down anywhere between 20 to 40%. So the headline indices, the mid-cap 100, small-cap 100, not so much. The NSE 500 have really not got impacted. So this is a cleanup which was very much needed. We are still in a consolidation phase. I don't think we are out of the woods as yet. And the market is likely to spend more time in a range and not make new highs in a hurry, because the correction started with the small caps, then moved to the mid caps. And now you are seeing some large caps come under pressure. And till the Nifty does not really get past levels of 22,050 on a closing basis, I would want to believe that the chances of a dip towards, say, 21,500 or maybe even a 21,000 is pretty high. So I don't think this market is running away anytime soon. It is still a very stock-specific market, so the index might not do anything special. But given the big damage that you've seen in the small caps, there are some select opportunities that are coming by. So once again, stay away from the large caps because the Nifty is looking a little top heavy, but the small cap opportunities remain.
Interesting, Gautam, because everyone, this is also Samina joining in, everyone, at least in the fund space, has been trying to rebalance portfolios towards a larger cap space, only because, one, they haven't performed in a big way, and secondly, because the risk reward may potentially be favorable. But great point. There is probably more opportunity in the small cap space. A couple of months ago, I read one of your interviews that said that 22,300 was your working target, and 20,900 should be a good sort of support for the markets. Now, I want to pull out sectors and talk about how you feel about them. With the way the dollar index has been moving with the Fed's rate decision, it seems like metals are on a bit of a sideline, at least in the last few days of trade. Of course, that's the negative. The positive clearly being that China stimulus could be helping commodity prices higher. On the metal index and on metal stocks, are you constructive on anything here?
See, firstly, don't get me wrong. I think from a medium-term, long-term perspective, we remain a big bull. And I think all of India's positives remain intact. And I think the liquidity, India's outperformance in the world, all of it will play out and will take the markets higher. However, from a near-term perspective, I think there are challenges. And that's probably the reason I feel that there could be some more large cap correction. I mean, I haven't seen in 20 years that the Nifty has lost 2% and the small caps have lost 12%. I mean, on an index level, forget about individual stocks. So it's a very unique internal rotational correction that we've gone through. Having said that, I think this has become a very stock and sector-specific market, and metals are right on top of our list. I think we love the entire space. We think that metals could be one of the best performing sectors this year, along with pharma. And, stocks like Nalco, SAIL, JSW Steel, JSPL, Tata Steel, they all look good to us from a risk reward perspective. Not so much other sectors, real estate, auto, capital goods, which I think have run their course for the time being and need to go through a time correction. So our top two picks right now are metals and pharma. Those are the spaces where one can hide. And apart from these two spaces, the two other big stocks that we like for this year, and we've maintained this for a while now, is SBI and Reliance. And I think both these stocks could really be the trades of the year.
Right.
Wow. Sorry, Gautam, did you say Reliance and SBI as the stocks of the year?
Yes, I think we've been maintaining this for a while. SBI, I do see it gradually move to four figures. I think that's a big move if it were to play out. And Reliance is coming out of almost 18 months of consolidation. So I do see a 15% move there. And when you see some of these big stocks seeing such kind of moves, I just feel that the Nifty will stay protected. So you will see phases where there will be a lot of fear, there will be pessimism on the screen, but some of these stocks will bail out the market from time to time.
That's interesting. I remember when ITC used to be at circa 200 and consolidating for such a long time, is when Gautam Shah had come and said that there is probably a change in trend being seen. Then ITC had a phenomenal run. I wonder if kind of Reliance is doing that, because 18 months of consolidation is a very long consolidation. And maybe if you're bullish on the Nifty, at some point of time, Reliance does need to participate. Actually, in that same vein, Gautam, more than Reliance, HDFC Bank needs to participate, right? Every fundamental voice out there. Today, there's a Bernstein note which says 5 charts, and we say that HDFC Bank is the best value that ever been, something like that. Now, but everybody's found value in HDFC Bank at 1500, 1475, 1450, and the stock just doesn't budge. When does it move on the upside if it does?
Yeah, I think all tricks of the trade have been used on HDFC Bank to move, and nothing has really worked so far. And I think it's just going to stay in a range because, I think you've got into a situation where anything below 1400 and people will find great value and there will be a lot of buying interest. And anything over 1500, 1550, there's going to be a lot of selling interest because just too many people are overly committed into one stock. And that's led to underperformance for a lot of people in the market, sadly. So I think HDFC pretty much is going to be in a range. 1380 on the downside, 1550 on the upside. And one does not need to overanalyze because if you look at the ratio chart, which is HDFC divided by the Nifty or the Bank Nifty, the underperformance continues. I think the better opportunity is probably in ICICI Bank, which I think could do much better. But banks, I think, are in a sort of a tricky space because 46,000 on the Bank Nifty is very important. If that number were to break, you could actually see a downtick on the Bank Nifty. So honestly, I'm just looking at SBI and some of the other top 2 PSU bank stocks, which is Canara and BOB. Apart from that, I'm staying away from banks because I don't think this is a market where you can be in high beta.
Gautam, until a few months ago, at the start of this year, you were fairly constructive on the IT pack. Of course, news flow like Accenture reviewing its guidance downward, Cognizant not very positive on the outlook, doesn't help the sector, right? Of course, a stronger dollar is one good news. Across the IT pack, will you be constructive even today? And if yes, what are your 3 top stocks in the IT stocks sector that you would recommend at this stage?
Yeah, I think you are absolutely right. I think for 3 quarters now, we've been very bullish on the IT space. In fact, the IT index got very close to that level of 38,500, 39,000, which was the lifetime high. And from there, we've seen this correction. The last 1 week hasn't looked good. The outperformance has gone to some extent, and this news flow today morning is not helping. So I think even the IT space has got into a bit of a hibernation mode. But still, from a medium-term perspective, I would be a buyer. But I would stay with the big boys. I still believe that TCS offers great value at these prices. There is not much to lose, and this dip today is a good opportunity for investment longs, followed by HCL Tech and Wipro. So I would stay with these 3 big names, and I would actually stay away from the mid-cap space where I think there will be greater concerns because they were extremely overvalued. They had run up substantially over the last many months. So stay with the 3 big boys. I think that clearly would be the recommendation from an investment point of view.
Right. Gautam, thanks for that. And also pharma, that was the other sector that you alluded to at the start of our conversation. That's a good space to hide, you said. It's been on a solid footing for whatever it's worth. How much more upside for the pharma stocks? And again, if anyone's looking to enter the pharma sector at this stage, at these prices, where would they buy and what should they buy?
I think the best is yet to come. I think pharma has been absolutely clean and smooth. We have seen consistently higher highs all along. And it is only going to get better and better because our working target is about 19,600 short term and about 21,500 on the index, more medium term to long term. So it clearly has been the place to hide. And I see continuous trend there, led by Sun Pharma, which is our favorite, and we've recommended it multiple times. Cipla, Dr. Reddy's. So I would stay with these 3 big names for the time being, and I would avoid the smaller or the mid-cap pharma companies where I think there is no great risk reward to be buying fresh at these levels. At a 22,000 index, I want to be in companies, which are super solid on the fundamental side, which are exhibiting relative strength, and which have the ability to sustain in case a 5% drop on the Nifty comes, which I think is a possibility. So given that, the 3 names that I mentioned and the entire pharma space in general look very positive.
Mm-hmm. Okay. Well, Gautam, just wondering, just dwelling on that point a bit. So US generic companies, just splitting hairs fundamentally, the US generics, the Sun Pharmas, Reddy's of the world have done very well in 2023. But some of the others, the CDMO companies, Divi's, Laurus, Granules, etc. haven't. Some of the diagnostic names just haven't. So is it only the US generics which have had a good 2023 looking strong? Or is there some buying that could come into some of the underperformers as well?
No, I think this is a market where you stay away from underperformers. Winners continue to win, losers continue to underperform. And we've had some great examples in the form of HDFC, Asian Paints, Bajaj Finance, and, a long list of stocks, which have not done well. Divi's Lab and Laurus Lab in the same breath, which were the darlings of the market in 2020 and 2021. So I think I'll just stay with the big boys, and I like to stay with these US generic companies, which are much better. Diagnostic, again, I was very hopeful sometime back that they could come back, but they seem to have lost their way, apart from Apollo Hospital, which continues to be on top of our list. But the other names, Lal Path Labs, Metropolis, I'm not too sure. I don't think there's an opportunity there.
Fair call. Stay away from the losers, if you will. So that's the key point. Gautam, other thing that has done really well, and maybe post Fed 2 is gold. I mean, maybe not as well as Bitcoin, but has done well. What's the sense here for the rest of the calendar year?
Well, Niraj, firstly, thanks for pointing out ITC. Yes, at 200 levels, we did put out a very bold call on ITC that it could be a doubler. It happened. Thereafter, we made the point on your very channel that Coal India could do what ITC did, and that pretty much happened. Touch wood for us, it went off really well. And about 6 to 8 months back, at levels of $1,900 on gold, we said that it could be the trade of 2024. It could actually beat benchmark returns of equity markets this year. So far, the going has been great. Gold has sustained beautifully above levels of 2,050. And I do see a move towards $2,500 to $2,700 on gold is coming. Now, that might be tough in terms of returns for the equity markets. And given the Fed stance, and if you look at the last 20 years, whenever Fed has cut rates, gold has seen its best move. So I think a mega trend has already developed in gold and even silver. I mean, look at the move in silver in the last 10 days. I do see silver appreciating 15-20% to levels of $28 to $28.50. So gold and silver, one should be topped up. Use every small dip to buy, and it could be as high as 15% of your individual portfolios.
One quick question: constructive on any of the Adani Group names?
Not really. As I said, I want to stay away from high beta. I think we've played high beta in the last 6 months and we've all enjoyed the rally. But right now, I don't think I want to stay with high beta because I feel this is an election year. There's too much on the table and there are much better, solid stock-specific opportunities in other spaces of the market. Yes, a few Adani Group stocks like an Adani Port might continue to do well. But at these levels, I'm not willing to, park capital there.
Thank you, Gautam. We wish we could have talked to you longer, but we'll hopefully see you soon again on the channel. It's always great getting perspective from you. Well, that's Gautam Shah. His big bets are SBI, RIL. Stay away from the losers. Stay away from beta. What you do want to do is focus on the winners, and there is more opportunity in the small cap than the large cap space. In the meantime, the markets are having a bit of a sulk thanks to IT. IT sector is down and out with a 3% cut. From the largest to the smallest, IT stocks are seeing a cut of 3 to 4%, 3.5% now on the IT pack. And this is all thanks to Accenture, which viewed its guidance downward. But we'll take a break. But Niraj, anything else that you've picked up? Because right after this, we'll be talking to MGL.
Yeah, and it'll be interesting because there are contrasting views at play. Somebody very bullish, somebody bearish, somebody talking about already the price cuts being cushioned by some factors. So multiple forces at play for MGL. It remains a conversation that viewers shouldn't miss. So stay tuned. We'll be right back and talk to the management of MGL. Right, thanks for tuning in back on India Market Open. And the management in focus today is Mahanagar Gas. Now, the recent price cuts brought about a bit of a decline in the sentiment, and the stock has duly corrected, maybe nearly 15-20% from those highs that it clocked in. The company remains constructive on its volume as well as margin outlook, despite the comments about the recent Oil Minister comments as well, which prompted downgrades from multiple brokerages. Get in Mr. Ashu Singh, who is the managing director of the company, to try and put into perspective all that's happening around the business. Mr. Singh, good having you. Thanks for taking the time out.
Morning.
Good morning. This is Niraj Shah here. How is the business environment looking in light of the fact that there are multiple forces at play? One is around pricing, two is around the probability about whether circles will remain the bastions of the incumbents, or will new competition come in and disrupt, and of course the demand picture looking as solid as ever.
No, all these things are always at play. It's not that something new has happened in recent market or any disruption has happened as such. In fact, the indications are that the government has been supportive of the CGD sector. A lot of investment is coming up. Almost all of India is covered by the authorization of geographical areas. Coming to your point that there has been market play in terms of how we are competitive with respect to petrol and diesel. So CNG in Mumbai or Mahanagar gas is around more than 50% cheaper as compared to petrol, and around 22% cheaper as compared to diesel. So we are always a competitive market where we are playing, and in other industrial and commercial also we have competition with other liquid fuels. And in domestic PNG we are having competition with LPG. So all that we are well placed in terms of pricing, and we expect that the volume growth will continue for the next financial year.
In a recent investor conference, Mr. Shinghal, the company was on record saying that the price cuts have happened simply because there has been a reduction in the feedstock cost, if I'm not wrong, and that created the margin headroom which enabled you to do this. Now, my question is, would this mean that the operational metrics for MGL for the current quarter as well as the quarters ahead would largely be maintained or similar to the average levels that we've seen in the past? Because if you had headroom and you cut it for volume growth, your margin picture should look intact.
Yeah, it's very flexible. I mean, the cost of LNG is passed through if LNG or the APM gas. If the cost goes down, we pass on the benefit to the customer. In the same lines, when the LNG prices have fallen down in last 4 or 5 months, so we have cut down and passed down the prices benefit to the consumer. Therefore, we expect the margins will not shrink as such. We are around 12.5 to 13 rupees margins EBITDA per SCM. And we expect similar numbers to come in this quarter and the year ahead.
Okay. How is demand, Mr. Shinghal? I mean, you spoke about the competitive forces at play, which have always been there, I would presume, and you would probably say the same thing. So how is the volume growth outlook looking like? Because you have sounded off in recent investor conferences, again, that you are confident of the volume growth as well. Talk to us a bit about demand, sir.
Yeah, currently we have, since last 9 months, we have a growth of around 4%. And this quarter has been better than the Q3. So we expect to end the year around 5% growth year on year. Next year, we have already launched several schemes of getting more CNG vehicles on road by giving benefits to the purchaser in terms of discounts on the capital cost and running cost in fuels, as well as retrofit market. So we expect that next year we may have a growth of around 6 to 7%. And also the prices are very favorable, as we have done several cuts since last 1 year. So they must be attracting more of the volumes on road in terms of CNG, as well as industrial and commercial. We are connecting new customers.
Do you sense, sir, that conversions have picked up by virtue of the fact that the discount between the price differential between your and petrol, for example, gas and petrol, has presumably widened considerably?
Yes, yes. Actually, if you see the data also, last year we had 65,000 vehicles which got converted into CNG. And this year in 9 months, we have already have 57,000. So last quarter, we expect another around 20,000 or so. So 22,000. We will be hitting somewhere 80,000 this financial year. So that gives a momentum to the convergence, and the same momentum we expect with the schemes and the favorable price for CNG to continue for the next year as well.
Got it. Mr. Singh, before I move on to the exclusivity conversation, just one more question. Most analysts who track this space and your company very closely are penciling in volume growth of 7 to 8% FY25. They are penciling in that the margins for FY25 and 26 will be at the upper end of the guided range as well. There are very few where I'm seeing assumptions to be lower than what your guidance would have been. Is it fair to be this optimistic looking at the trends that you may be seeing as well?
See, we don't want to commit more than what we can deliver. So we are a bit conservative on terms of when we are airing our numbers. But you are right. There is no such threats as such to the business. And we expect the numbers to grow in 6 to 7% on a safe side. And it can be slightly higher if things are more favorable. As well as since the prices are in they are cheapest in the country in terms of CNG and PNG. And the delta is very handsome in terms of petrol and diesel vehicles. We expect the volume growth to continue as well as momentum to pick up in the next financial year. While maintaining the margin also in similar range, yes.
Okay, I get your point. Now, the point around the infra exclusivity and across various geographies, what are your thoughts here? I know there is a legal challenge, so I'm not asking you to comment on anything which may be sub judice, Mr. Singhal, but just on the broad concept, because the thoughts are divided there. I'd love your opening thoughts, and then I have a couple of other questions on this.
See, there are two concepts as per the Act. One is that contract carrier pipeline should be allowed to for other companies to use those pipelines and deliver the gases to the consumer. The other is which is called marketing exclusivity, which was in the court in 2015, and stay was granted by the Honorable High Court to not take any coercive action against the CGD companies. That is one part of it. The other part is when a specified period is over, the infrastructure exclusivity also get expired. But again, that matter is again under sub judice. It's being deliberated and discussions are yet to conclude. But there is a precedence under the regulation that 10-year block extension can be given, and which has been granted to some other companies like Gujarat Gas. So post that notice which has come up recently, we have also applied to PNGRB, the regulator, to get a 10-year block extension, and we are very hopeful that it will be granted to us.
One of the beliefs, Mr. Shinghal, is that even if infra exclusivity was opened up and was not exclusive in that sense, it will be difficult for a company A to go out and compete with the same ROEs, so on and so forth, in something which has been the bastion of company B. And vice versa for B to C and C to A, so to say, hypothetically. I'm just using these as an example. Would you, as somebody who's heading this business, concur that even if some other circle's exclusivity was no longer there, it will be difficult for a company like you to go out and compete there, and vice versa for any company to come in and compete with the right return ratios and the right margins in the domains that you have operated for such a long time?
That's very logical because, see, Mahanagar has been operating since the last 25, 26 years in Mumbai and the other areas. Mumbai has developed over the years. Now the roads have been concretized and our assets are depreciated. So any company to enter into a new geography will be a challenge. The overheads will be high. To create that infrastructure and to also deliver the same competent rates will be very difficult. So across globe, it is seen that infrastructure exclusivity is typically extended for a longer period, and marketing exclusivity is wherein the pipeline or infrastructure is allowed by other companies to use, is granted by the regulators across the globe.
Even if it was not, sir, my final question, even if it was not, would it be impractical? I mean, let's assume that in all fairness, things are opened up. Let's say, I'm sorry, not using the term fairness, but let's assume that things are opened up for whatever reason, or whatever the reason may be. It'll be difficult for an MGL to go out and compete with somebody else in their areas, and therefore it's not from a business decision perspective. Even if the option was available, maybe it will not be taken up in all probability.
No, we can't say like that because, see, the modular concept is also coming in CNG. There are different models wherein LNG can be brought to that station and a modular station can be set up. So you don't need a big infrastructure to start working in other areas. So the earlier things were more conventional when the pipeline infrastructure was required and things were required. Now things are changing a bit. So if the market opens up, it's an opportunity for both the parties, either MGL to go out and work in other areas and vice versa. But the fact remains that the person who has entered into the market has 25 years on the line and created the infrastructure. For anybody else to compete with the rates will be a bit of a challenge. But if the marketing exclusivity is gone and the same pipeline infrastructure is access is given to other parties, then it can be done easily.
Okay, and on that, sorry, my last question therefore is this. On that, you are saying that as has happened globally, that these periods of exclusivity ideally should be much longer than what they are right now?
See, infrastructure exclusivity is a term wherein if the market is monopolistic in nature, but here there is no monopoly as such. One, that the GAs have been bidded and the parties or the entities who have got the best rates have got the GAs. Secondly, we have got three segments. One is petrol, diesel, we are competing with CNG. LPG, we are competing with PNG, and liquid fuels and solid fuels are being competed with industrial PNG. So there is no monopoly as such in that respect. And if the marketing exclusivity also goes away, the infrastructure available can be used by paying certain use charges. The other parties can use it. So as such, there is no thing which we can say as a infrastructure exclusivity in strict terms. There is no monopoly in that respect because multiple forces and the price determination is done as per the market price.
Your point. Okay, Mr. Singhal, we'll leave it at that. Thank you so much for taking the time out and speaking to us today. Have a great Holy weekend.
Thank you so much.
That's the view from Mahanagar Gas. Optimistic about volume growth, optimistic about maintaining margins despite the price cuts that have happened. The quarterly numbers will put that into perspective as well. Maybe not Q4, but maybe Q1 certainly. So it'll be interesting. Of course, the cost of feedstock will play a big determinant into that as well. Now, before we wrap up this show, have to mention IT again because that's been the big buzzword on a day when the Nifty IT is down 3%. A slew of brokerages have come out with their view on the IT stocks as Accenture cut their revenue guidance. Agam has some details on that. Agam, over to you.
Right. So the reason behind the weakness in IT stocks is the kind of commentary that is coming in from the stable of Accenture, indicating that there has been a tightening on budgetary spends from clients, specifically in the US and a lot of other regions. And that, of course, is weighing on the sentiment of the IT sector. Over the past couple of quarters, we have already known about a weak demand environment for the Indian IT sector, but moving in, what we have a handful of brokerages which have also given their own read-through as far as the IT sectors, Indian IT sector is concerned, based on Accenture's commentary. So I start off with Nomura, where they are suggesting that client discretionary spend has been tightening. Clients continue to prioritize spending on cost optimization initiatives, but not as much as expansion is concerned. A positive here, of course, is that there's more opportunity in cloud adoption and data standardization, and Nomura has a buy on Tech Mahindra. In the large caps and the mid caps, a buy on Coforge, Birlasoft and eClerx. They do, however, have a reduce on TCS, Wipro and LTIM. Moving on, we have Jefferies, who also suggests that Accenture highlights rising constraints when it comes to tech budgets, as well as slowdown in managed services, which do not bode well with Indian IT. And we have rising weakness in financial services and verticals, and this also has a negative read-through when it comes to names like Tech Mahindra and TCS. Finally, we have Citi on Indian IT, again based on what Accenture has suggested. They do suggest that the forecast is suggesting tightening of IT spends, and the pace of demand recovery will be a lot slower than anticipated, and many of the other factors which are also weighing down on the Indian IT sector today, and which potentially could over the next few quarters as well.
Agam, thanks for putting that into perspective. As we wrap up the show, a few stocks to monitor. HEG, and I presume even Graphite India might be in the green. So pull up both of those up in trade, 5 or 6% higher for HEG, so it's perked up even more. Is Graphite India up about a couple of percentage points, so watch out for those two. Prestige, of course, arguably could be one of the key stocks of the day today, up about 5%. Prestige Estates. Remember, NDTV also had this exclusive about the Marriott Pact being signed and the news flow today on Prestige. Amber, CLSA has initiated, or rather upgraded the stock, if I'm not wrong. The price target at 4,300, if I'm not wrong, and Amber Enterprises is seeing some pullback from there, up about 5% on the back of that. Second on a trot now, Inox Wind is in the green, 489 and counting, 4% higher for that one. 4% for Inox Wind. Wonder if Suzlon is up, because Suzlon was that key price and volume buzzer in the session yesterday. Big price and volume jump for Suzlon in trade yesterday, and Suzlon should come up on your screen next, and just see if that stock has any upticks today. No, not really, just about 0.94%. So those are a few names to monitor. Zomato, by the way, just before we wrap up, is at 173. So after the bulk deals and in correcting all the way to 155 or 156, Zomato is back in business, if you will. Take a break on that note. In fact, wrap it up on this leg of India Market Open. But stay tuned. Up next is Talking Point with Vetri Subramaniam.